financial accounting, cost accounting, and management accounting. Let's understand each of these in brief. Financial accounting. Financial accounting deals with recording and preparation of the financial statements, revealing the income and financial position of the businesses on the basis of events which have happened in a particular period. The major purpose of financial accounting is to report the position of the entity as on the reporting date, as well as the performance of the entity during the period covered by the previous reporting date and the present reporting date. This reporting is done through various financial statements, important ones being income statement and balance sheet. Financial statements present information on revenues, profits, cash flows, assets, liabilities, and so on. Though this information is very important, it does not adequately aid the management in planning, controlling, organizing, and efficiently conducting the course of the business, as a result of which cost accounting and management accounting have emerged. Cost accounting. Cost accounting involves recording, classifying, analyzing, and allocating costs to determine the cost of products, services, and processes. It provides detailed cost information for internal decision-making. Unlike financial accounting, which is primarily for external reporting, it's managing the costs associated with producing goods or services. It helps businesses to understand their cost structure, improve efficiency, and make informed decisions about pricing, budgeting, and profitability. The costing function provides information that is crucial for profit measurement in financial accounting. The cost of products and services to be considered with respect to the revenues earned is provided by the cost accounting system. Management accounting. Management accounting deals with data processing generated by financial accounting and cost accounting for managerial decision-making. It also uses managerial economic concepts for decision-making. Management accounts facilitate planning and control of activities of organization. Cost accounting is indistinguishable from management accounting, as the major purposes of providing information for control purpose and for formulating plans and policies is common to both. It should, however, be noted that traditionally, cost accounting was concerned with the determination of product costs and inventory valuation. And in this respect, it was an extension of financial accounting. The function of management involves taking decision with respect to day-to-day operations of the entity and strategic planning. Let's understand key differences between management accounting and financial accounting. It is generally targeted to managers within the organization. It is targeted to various stakeholders, including outside the organization. Preparing managerial accounting is not mandatory. Maintaining financial accounting records is statutory requirements. It is not regulated, as it is intended only for management. It is closely regulated by GAAP, accounting bodies, and government authorities. It uses historical data, along with projections and estimations. It primarily uses historical data. Thank you for watching. If you enjoyed this video, don't forget to give it a thumbs up. I'd love to hear your thoughts, so drop a comment below. And most importantly, hit that subscribe button and press the bell icon so you never miss an update.